asset management company, joins us now from the sidelines of the CFA Society India 3rd Wealth Management Conference. Jayesh, thanks very much. It's always a pleasure. Let's just begin by talking about the market. We're hitting pretty much new highs practically every day, every week. We are outperforming other emerging markets. Actually, on a YTD basis, the outperformance is quite significant. What's your sense? I mean, are we at a point where we need to cool off a little bit, a bit of a correction before anything else? What's your sense?
Well, calling a correction is always a tough one. Market generally ends up climbing a wall of worries, which is what has happened in the last few months as well, if you might have noticed. And, frankly, I don't see a significant correction. There could always be a short, small corrections, and those are part and parcel of the bull market that we are currently in and experiencing, fair amount of robustness in equities because of better earnings, because of, better outlook on the economy, etc. This excitement and interest in the equity markets will continue. There could be some small, volatility, let me put it that way, but not a big sell-off. That's at least my view as of now.
Hi, Jayesh. Good afternoon. The year has been tough to be a mid-cap fund manager, right? But you think there's value back at current levels?
Oh, absolutely. You nailed it. We are seeing a lot of value in the mid and small cap segment. Please understand, you have to look at the market and market performance over the medium term or over a 2-3 year period. And if you recollect, last year we had a massive uptrend in mid and small cap, where the small and mid cap indices gave returns far, far higher, over 100% in some cases, over the large cap index. And some of that has been evened out or normalized this year. Having seen a correction in the mid and small cap space in the first half, my sense now is that the indices should move in line. Unlikely that mid caps and small caps will underperform more than the large cap market over the next few quarters or in the medium term, near or medium term. And my sense is that earnings for mid and small caps are going to come back significantly better than some of the large cap indices. And that will, to my mind, add not only better valuation, but also significant comfort for investors to take a medium-term bet in this segment.
Jayesh, you own PNB Housing, Repco, Satin Credit, etc. in your portfolios. What is your view on that space now? I don't know if you bought it recently or you've been owning it for a while, but at these levels, what's your view?
Well, home finance companies, NBFCs or focused home finance companies are largely compounding stories. The deficit or the requirement for home finance in this country is humongous. It could go on for years and years, and there is significant amount of investment that needs to go into home finance and lending in the home sector. Obviously, the NBFC have an edge because they are very versatile, they're very dynamic, they can tailor products specifically to a customer requirement, and they are addressing requirement of customers which are currently not being addressed by the banks. And hence, we think focused housing finance companies have a very long positive outlook in terms of earning growth and of course in terms of delivering asset growth over the 3 to 5 year period or even longer. Valuations with the recent corrections have come down to a more measured level, and to us that offers a great opportunity to buy growth stocks at reasonable valuation.
Okay. Also, SEBI is considering doubling or even quadrupling the minimum ticket size for investments in PMS schemes. You think that's a move that could impact the mid-cap space?
Frankly, we have not seen much impact, at least at our end, of the classification and the changes in the scheme classification which has been suggested by SEBI. I can't talk about others, but at our end, the impact has been minimal. Yes, you could say that some bit of euphoria last year in the small and mid cap space, particularly small cap space, was driven largely by retail and HNI community, and a large number of PMSs run where unrealistic expectations were given out, or investors were sold products with unrealistic expectations, and some of those probably would have gone fat, or some of those expectations are obviously not met. They're unlikely to be met anyway, and so there was a drawdown from that section of the investors in the first half of this year, which led to a sell-off. But again, those are part and parcel of any bull market. So I'm not so concerned or worried. In fact, we believe that some of the changes suggested by SEBI are very good and healthy for the long-term growth of the industry, and I see very little impact of those. But there will obviously be a section in the investment community which create these excitement in the market, which again leads to drawdowns in subsequent period, and that, to my mind, is probably a larger driver of some of the correction in the small cap space.
Jayesh, thanks very much. Appreciate your joining.